Imagine a country deciding to just rip up its entire tax code and start completely from scratch. Well, that's exactly what Nigeria is doing in 2025. Today, we're breaking down this massive revolution, a complete overhaul that's set to change the financial landscape for pretty much everyone. Okay, so to really get a grip on why these 2025 reforms are such a big deal, you first have to look at what they're trying to fix. Because, the old system wasn't just a little outdated, it was seriously holding back the entire economy. So why go through all this trouble? The simple answer is that the previous tax system was just a mess. It was way too complex, totally fragmented, and honestly, not built for the modern digital world. It was becoming a massive roadblock for anyone trying to do business. I mean, just look at this. Businesses were literally tangled up in this complex web. You had taxes at the federal, state, and local levels, often run by completely different groups. On top of that, companies were getting hit with this whole bunch of separate levies: a tertiary education tax, an IT levy, a police trust fund levy. For any business, trying to navigate all of that was just a huge, expensive headache. So the big question is, how do you fix a system that's that tangled? Well, the government's answer wasn't to just tinker around the edges. Nope. They decided to replace it completely. And they built the new framework on 4 brand new acts. And here they are, these 4 acts: the Nigeria Tax Act, the Tax Administration Act, the Revenue Service Act, and the Joint Revenue Board Act. These are the pillars of the new system. Put them all together, and the goal is pretty clear: make things simpler, bring the tax system into the 21st century, and really importantly, spread the tax base out so it's more fair for everyone. Okay, so that's the high-level stuff. But what does this actually mean for businesses on the ground? Well, these new laws completely change the game on who pays tax and how they pay it. And the shifts are, well, they're pretty significant, especially if you're an international business or a smaller company. And this right here is a perfect example of just how big these changes are. Look at the definition of a Nigerian company. It used to be simple. Were you incorporated in Nigeria? Yes? Okay, you're a Nigerian company. But now, it's a company incorporated in Nigeria or one whose central management and control is in Nigeria. This is a huge deal. It means even if your company is officially set up somewhere else, if you're running it from Nigeria, you're now on the hook for Nigerian tax on your global income. That is a massive shift. And hey, remember that crazy, confusing web of special levies we were just talking about? Yeah, those. Well, the newer forms basically take a sledgehammer to all that complexity. Instead of all those different taxes, they've all been swept away, gone. And in their place, a single, straightforward 4% development levy. Just think about that from a business owner's perspective. You go from multiple, confusing calculations and payments down to just one. The changes to value-added tax, or VAT, are also a real game changer. For businesses, they can now claim back the VAT they pay on things like services and fixed assets like machinery. Before, you could really only do that for goods you were planning to resell. This could seriously lower their operating costs. And for you, the consumer, the list of essential items that have zero VAT has gotten longer. We're talking basic food, medical supplies, educational materials, things that people really need. The reforms also give a major leg up to small and medium-sized businesses. So let's look at the old system. Under the old rules, if your company had an annual turnover of 25 million naira or less, you were exempt from paying company's income tax. Well, take that number and double it. The new threshold is now 50 million naira. That's a huge jump. It means thousands more small businesses won't have to pay any income tax at all. And that frees up a ton of cash that they can put right back into their business to grow and hire more people. But listen, this isn't just about shuffling the numbers and changing the rules on who pays what. It's a fundamental shift in how taxes are collected and enforced. We're talking about a major push into technology, backed by much, much tougher penalties if you don't comply. The whole system is being brought into the digital age. Mandatory e-invoicing, real-time reporting. The goal here is to create way more transparency, crack down on tax evasion, and just make the whole process smoother and more efficient for everybody involved, the government and the taxpayer. And a huge piece of this digital puzzle is this word, fiscalization. It sounds complicated, but the idea is actually pretty simple. Think of it like a smart cash register that's directly linked up to the tax authorities.
So every time a sale is made, that data gets reported automatically in real time. This closes a ton of loopholes and gives the government a much clearer, up-to-the-minute picture of what's happening in the economy.
Now, to manage this new high-tech system, the government has basically rebuilt its tax agencies from the ground up. First, the old FIRS is now the Nigerian Revenue Service, or NRS, and it's got a bigger mandate and more funding. Second, a new joint revenue board is being set up to finally harmonize taxes across federal, state, and local governments, to get rid of all that confusion. And third, and this is really important for taxpayers, there's a new independent tax ombuds office. This is a place you can go to get help resolving disputes fairly.
And to make absolutely sure that everyone plays by these new rules, the reforms come with some serious teeth. The penalties for not complying, things like filing your returns late or not at all, have been jacked up significantly. The message they're sending is crystal clear. Compliance isn't optional anymore.
Okay, so we've talked about all these new laws, new agencies, and new tech, but let's bring it back down to earth. What does all of this actually mean for regular people and businesses? What's the real-world impact? This table really does a great job of breaking it all down. You can see it's kind of a balancing act. For SMEs, small and medium businesses, that higher tax exemption is huge. It means less tax to pay and more money to grow. For the big multinational corporations, though, things are getting tighter. They're facing new rules, like a minimum 15% effective tax rate, which means more scrutiny and potentially higher tax bills. For individuals, the income tax brackets are being adjusted to be more progressive, so lower earners pay less, higher earners pay more. And for all of us as consumers, those VAT changes could mean lower prices on essential goods like food and medicine. So when you take a step back and look at the whole picture, you can see the three big goals they're trying to hit. Number one, simplify a system that was just notoriously complicated. Number two, modernize it for a digital 21st century economy. And number three, broaden the tax base so that everyone is paying their fair share and the burden is spread more evenly. But, writing new laws is one thing. Making them work is another. As the tax experts at PwC Nigeria point out, and it's a really important point, the success of all this hinges on effective implementation. The real work, the hard part, is turning all these bold ideas on paper into actual, measurable results for the economy. And that really leaves us with the million-dollar question, doesn't it? This is, without a doubt, the biggest shakeup of Nigeria's fiscal system in a generation. It's ambitious, it's comprehensive, but will it actually deliver the transformation that it promises? That's a question that only the next few years will be able to answer.